Hello, folks. Welcome to another edition of Market Action. Dave Russell here. Hope everyone had a great Thanksgiving. So basically, we have market just chopping near the highs. And something I want to mention right off the bat, let's take a look here at the hourly candles and the E-mini futures. There was a bearish engulfing candle at the 10 a.m. hour. This thing right here, let me just put an arrow in. And, look, I'm not bearish. Our strategy is still bullish. Early in the day, before the market opened, we said we think we should look for a pullback to the support level, which is basically 2187 on the futures. So let's take a look at the 10-day chart here. And you can see this level goes back a week or so. Basically, this line here, this lower one, we think we should look for a high to roughly the highs from November 20th, November 18th. That's where I think we're going to go. And then we're going to have a nice snap back to the upside. I don't think it's a good idea to be bearish. I don't think this market has the ability for much of a drop. But I do think it can drop 15 points. And I think, I'm going to be buying when that happens, and I'm going to look to ride it up 10, 15 points back up because I think we're going to get that trade. And so I want to anticipate these things. I see a little bit of a shift of some of the things we've been seeing for a while. And I think right now is definitely time to be selling calls in those banks. If you take a look at some of these, look at the bond yields. This is a 30-year bond yield. Now, banks in many ways have been basically the same thing as the yield and the bonds going up. Big shooting star thing here last week, this big tail going up on the 30-year. The 10-year is pretty similar. Now, I don't think these are done in the big scheme of things. I think we're in 3 to 6 months, we could easily see interest rates be higher. But I think in the next, 1 to 2 weeks, we could easily see a pause in this. And if that happens, some of these bank stocks that have just had incredible runs are going to, I think, stall. And I think this is the time, so for example, to be selling calls that are just in the money. If you're long KBE, in my opinion, something like selling the December, 40 calls, that's, I think, where we want to be looking right now. Look at these calls. If you sell these for $1.45, you're bringing in almost $1. You're bringing in, that's not as good in KBE, but if you look at some of these others, I think the idea is its liquidity is kind of cruddy in this one. But if you take a look at something like, say, Bank of America, in my opinion, something like selling those 20 or the 19.5 calls, that's going to have, a good tight bid-ask spread on those and be a lot better. Say you sell those Bank of America calls here, you're going to basically be locking in, you're going to be making a little bit to the upside, but the key thing is, you're going to basically be taking away $1 from the bears. So, the bears are going to want to take $1 away from you, drive that thing down to 19.5, something like that. You sell those calls, you're safe. And I think right now when you make this much money, it's like these have been awesome. I think now's the time to be thinking about selling those calls that are just in the money. You just, you take away that top, 3 to 4 or 5%. Give it away for right now, lock it in, and you're gonna basically, I think, that's the kind of risk management I think we want to be looking at here. I think if you're in high delta calls, you want to roll again way out in time, lower delta, longer time as a way to manage. I still think Bank of America is going to go higher, but like I said, 1 to 2 weeks, I wouldn't bet on it. I think now is the time, and I think we're seeing it with a turn in the bonds. I think that's really the key thing. Every morning we do this, we started to do this analysis of the groups and sectors. If you go on Research Lab to the groups page, every day now this write-up will be here. And one thing we noticed that was very interesting was that we're starting to see a little bit of a turn here where the last 1 to 2 weeks has shown nascent recoveries in utilities and real estate investment trusts. I'm not sure why this looks weird, but the key thing is this is a big thing for me because I think what we're seeing now is if you take a look over on the on Research Lab, we have the Spiders Fund. I study this all the time. This is the group that ranks the major S&P the major S&P sectors. And if you drill down into this group, if you look in the last 1 week or so, the XLU is outperforming the S&P 500. REITs are outperforming the S&P 500. Then we see those tails on the bond yields, those big shooting stars. And then look, XLF is underperforming the S&P in the last week. So like I said, not bearish on these at all. But these have been awesome, and I think now's the time to be thinking the other way around. So Like I said, right now I think we're just going to see some chopping, some kind of just grinding around, and I think that's just kind of where we want to be looking. ArcelorMittal is the one alert we've done so far today. MT December 7 calls were rolled to the December 8 calls. We didn't alert on those. Another one that Mikey and I were looking at, wanted to check on, was UNH. The December 160 calls were bought in these. This is looking kind of interesting to me. United Healthcare has been like probably the best healthcare stock. We can actually tell. Let's take a look here at the XLV. Just click on XLV. Let's actually drill down into the XLV, and we can actually take a look and see in the last, let's say, 2 weeks, United Healthcare, it's been strong, not the best. But, I mean, this is a sector that's been pretty horrible for a while now, and United Healthcare has been one of the strong names in that sector. I think healthcare still has some trouble, but one of the things in healthcare has two things. It has a regulatory risk and it has a currency risk. United Healthcare doesn't have that as much. It doesn't have the currency risk, at least. It seems that they're not really exposed to this Obamacare risk the way some of the others were. So I don't know. We did not do an alert on this one yet, but this one's grabbing my attention because this is a stock we have consistently liked. We had identified it as a buyer on 140, and we haven't really talked about it much because we feel healthcare is in a bad space. But I don't know. I think this is still pretty interesting here. And these calls to United Healthcare, the Jan 160s, I don't know. I mean, this has just been a great stock. And if there's a little bit of rotation back to healthcare, this one might just crank higher. Mikey also made the interesting observation that we had a fair bit of put selling today. Schlumberger, early they came out selling puts. The 81 puts expiring this Friday. 2nd of December were sold in Schlumberger. PayPal, which I own and I recommended recently, as it, breaks out and pulls back. PYPL, the $40 puts also expiring this Friday. And the puts in Mobileye, MBOI, these are the standard monthly $36 puts in December that were sold in MBLY, Mobileye. Okay. It's interesting, all the stuff like I said about the look at actually the dollar index here. We look at this. I mean, this went to a multi-year high. But if you look at, usually when things go like this, they don't just go straight up. There's going to be some kind of consolidation. And it's not just a 52-week high. On the UUP, we also have a high for the middle of 2015. In my opinion, I think it's going to take a month or two to probably take out these levels. And it might not at all. And if that happens and this is a top in the dollar, that's why we're seeing gold and silver strong. It's why we're seeing utilities strong. Another area that people don't talk about, I don't know anything aside from Research Lab that covers this, but let's look on Research Lab's groups on a year-to-date basis, because we see as a group that no one talks about, but it's very interesting, the Latin American utility stocks. These guys are more than doubled on a year-to-date basis, and if you look at them, they're back strong in the last week or two. Look here in the last week, up 6%, just today up another 3%. If the dollar is topping, if Latin America in the global trade comes back after a brutal sell-off in the last month, these Latin American utility stocks, these are like mostly Brazilian stocks. This is going to be another area. They don't have great options liquidity, but last week we had talked about, and I bought EWZ last week. Look at this pullback. This is one of the big ones. ELP is this one. I don't even know what you call this thing, but still, it's it's a Brazilian utility stock. These things have huge dividend yields. Look at this pull. There's a 2-year chart with weekly candles. This pullback to 8. I got to say, I mean, to me, this is pretty interesting. Another one that's not, well, these are Latin American utilities. I just want to point this out because this is an area that has been very strong, and it doesn't get a lot of attention, but this is one that if we see a topping in the dollar, this whole area, CIG, there's a whole bunch. Check them out on Research Lab. Look at this, pulling back to this level from March. CIG. I don't speak Portuguese. I speak Spanish, so I'm not going to try to pronounce them. All right. That was something I did want to mention because these Latin American utility stocks have been just explosive. Also, it's interesting to see the correlation. Housing is weak today, along with consumer discretionary, along with banks. The bulk material stocks. The Trump stocks are getting kind of sold today, and we're seeing going back to the global trade. EWZ, I cited last week as a buy. I'm long EWZ. I think this is, EWZ, Brazilian, utilities, they're all kind of similar. One more Brazilian name that I think we got to keep here is Embraer. I was talking. I hope Mike is on the call. I'm not sure if he is, but we were talking in Vegas. Great customer of ours, and he's actually a pilot, and he was talking about how he thinks Embraer is actually an interesting name. Now, I was citing it before that based on the earnings and based on the turn in aerospace, but I think this is an interesting stock. It's a Brazilian airplane maker. Had a good earnings report. We were saying about 2 weeks ago, wait for it to pull back under 20. Here it is. I think here's another one that's pretty interesting at this level. So just wanted to point out some of these things. Let me take a look at some of your questions now. Target is down today. What do I think? I think we're just seeing right now the shift away from, there's that, remember that whole joke? Like, you see like political rallies and people go, we did this in the Marine Corps. People chant, USA, USA. The stock market's been doing that rant for the last 2 to 3 weeks, and today it's not all about USA. It's all about, now we're shifting more away from the U.S. just for right now. So what I think about Target, I think it's going to shop here, but you know what? This little mini rotation to the global, this could last a day or two, and then Target is right back, strong. So I think these consumer discretionary names, this is a 1 or 2 day period of weakness. I don't think this is any kind of problem. I do think JCPenney pulling back here under this 930 level, this stock is going to chop around here, but this is when we have paper in. I think JCPenney, between these two, I think right now when you look at some of these retail names, I think JCPenney is one of the more, is just right here more attractive. I think Macy's, maybe we got to see it get back under 42. I do want to say, though, that I am outright bearish on Amazon now. Over the weekend, I was just looking at stuff, and I was realizing, okay, Target is growing online. Walmart is growing online. JCPenney, all these companies are growing online. Well, I know that it is it's not just a kind of, one, a pie that, where, one guy takes from the other. In terms of that idea that the pie doesn't grow. I mean, obviously e-commerce is growing as a sector of the economy. But I think when it comes down to it, Amazon's been the clear leader. And I think now they stand to lose market share in a huge way. And I'm not saying that they're going to lose a lot, but the thing is I think we learned, if you guys look at what happened to companies like Kroger about 10 years, 15 years ago when Walmart said, we're going to do groceries. It wasn't fun. And you don't want to be Amazon that has very thin profit margins competing against a company like Walmart, which can eat margin. And I think right now, Walmart could really hurt Amazon. And they're not the only one. Everyone now says we're growing online. The amount of competition against Amazon, I think, right now is going to be ungodly. And I think that it's going to be a problem. Last earnings report wasn't terrific. It's a very expensive stock. And I think that there's been a shift away from these mega cap, FANG stocks, or whatever you call these big NASDAQ names. I would be very wary of Amazon here, and I think this one is not looking good. There was actually an article on that tech website, Recode, that when they actually said, hey, a whole bunch of companies have, better deals than Amazon. That kind of news doesn't stay secret forever. They did a comparison shopping of Amazon. I think we actually have it here on Research Lab. When we see things that are interesting or salient news things, I'm sorry, that's not Amazon, AMZN. It was just interesting. They actually did this analysis. So, look, we've seen Walmart play this trick before. It's not fun to be on the other side of Walmart when they start looking to enter a business. So I think Amazon right here, I don't know if you want to be outright bearish on it. I think it's going under 700. And if you look at this to me here, we have a lower high, we have a low here, then we have a lower high. I think that means that we're going to see follow-through on Amazon under 700. I honestly think that. All right. Let's take a look here at, so anyway, that's what I think about retail. There's something in CBRL. I'm not sure what it is, but maybe if Mikey can look into it. Mikey, if you're listening, CBRL, there's something in January. I'm not sure beyond that, though. There's something in Dollar Tree as well in January. All right, let me see. CLF and U.S. Steel. These are also probably just going to have very modest pullbacks and then continue higher. Probably another day or two down, and then when stocks are rallying like this, I think you just want to watch something like the 10-day moving average on them. These are near-term overbought. I think in a name like this, the 10-day chart can be very useful. I think one day you're going to have like a U.S. deal go down to 30 and get defended at that level. So I think right now is the time. I think it's time to wait for a little bit more downside in these names. What do you think about Walmart? Well, look, just because Walmart's attacking Amazon doesn't mean that they're going to be a good stock. We do have an open trade in this that I think it worked pretty well. We did cite something in Walmart on our premium service. Let's take a look here. I know it's on our activity log, and I'm pretty sure that snapped higher. We had a bullish trade on Walmart on the 22nd. It snapped higher. Those calls started doing pretty well. I don't know if I really think about Walmart here. It's probably going to move its way back up to 74. I think people are pretty confident in it. Right now, people are very hopeful in this name in terms of their shift to online. I personally think online, it's possible that everybody kind of loses, in terms of, Walmart, I think, is really two stories. You have this giant behemoth retailer that I think is a slowly dying business, or at least a slowly contracting. I don't think it'll die, but you're looking at a business now where, they've been stalling for a long time, and I don't think there's a lot of good stuff to say about Walmart's retail, like the brick and mortar business. I think that it's just going to be challenged going forward. The idea, can a company of this magnitude really reinvent itself by going online? I'm not a huge believer in that either. So I think Walmart will work its way back up to 74. But long term, I do not think this is, until this company starts really getting aggressive, they need to lever their balance sheet, buy back stock, close stores. That's what they need to do. And until they do that, this stock, I think, is just going to drift around. However, 74, I think it's going to work its way back up to this range. So I think definitely here, Walmart is going higher. It's why we did that. Not a lot higher, but I think that the near-term momentum will take it up to 74. So Mikey did an alert on United Healthcare. I'm thinking of buying puts in Starbucks. It looks sloppy. Yeah, I don't like Starbucks. This is one that I've also been I actually would kind of disagree with you on that. I would say that Starbucks now, I've been very wary of it for a long time, but I'm not sure. I mean, look, I think, it will probably go back to 55. So, I mean, if you want to have a short-term trade, but I don't know if it's going to drop super fast. You know what? This is an engulfing candle today, and whether it's bullish or bearish, engulfing candles are usually reversal patterns. So, you know what? I would tend to agree with you. I would tend to think it's going to drop back down to 56. I don't think it's – I think this company is showing now, it's consolidated for so long that the whole, bearish thesis that we had a year ago, I think has played out. I mean, let's actually see – take a look on Research Live here at Starbucks. I mean, see, I was bearish on this in January. I said it's going to go to the low 50s, stay away. I've been bearish on it really since the beginning of this calendar year. So, I mean, we said low 50s, it happened. So I'm not going to – I agree, it'll probably test back down to like 55, but I wouldn't go much beyond that. I'm looking for options that will track what happens in Cuba. I don't know. Cuba's been a communist country for over 50 years, and part of being a communist country means that they're not part of the capitalist system, and the stock market's a capitalist institution. So my honest belief is that trying to play something like Cuba is a little bit silly. I don't mean to be, that's not what the stock market's about. The stock market is about looking for established businesses, and Cuba is a new story, but they have these things called frontier markets. I mean, Cuba's not even a frontier market. I saw some story recently about how Iraq has been strong, but there's not a clear trade in Cuba, and I don't think it's a way to think. I think the Brazilian, makes a lot more sense. The Latin American ETFs make a lot more sense. But I'll be honest, if you just think about Cuba, I mean, we don't even know what's going to happen now that Castro's dead and now Trump's coming in. So I think it's a pretty hard thing to guess on. There might be an airline that's going to have some business there, but even then, I think you're talking about something that's relatively small. What I think about short-term options in Adobe, ADBE, I think this stock is. I don't think there's a good options trade in this at all. Um, I don't think it has any clear momentum. It looks like it's squeezing into a triangle, and you could get something of a drop down to 100. This is just not a very volatile stock, and I don't think of. I can see the argument that it's going to bounce here, but in my opinion, this sector's been kind of this sector, the relatively the software, the e-commerce, the strength in tech is in semiconductors and some of the hardware and the devices, that kind of stuff. I don't know if you're going to get a whole lot of juice out of Adobe. I personally think if it goes to 100, then you should look to get long. But otherwise, I think it's just going to be frustrating. To me, it's very neutral, so I don't have a good sense. I think you want stuff that has a sign that it's accelerating. That's where you want to be buying calls. Barrett Gold. The gold miners here I think are kind of interesting. I'm not sure. I mean, look at GDX holding 20 here. This is probably going to have this is probably going to run. Let's look at GDX because that's what I look at. I think it's going to run back up over 22, 23. But this is not ready for any kind of substantial or sustained rally. I don't think. The momentum in this is not good, and with the Fed coming up, I don't see any real argument in favor of GDX. So I think if you look at the industrial metals, things like some of the coppers and I would be looking for other areas of strength in the metal space. I'd say Century Aluminum, let's see if it comes back to 9. That would be the sort of thing I'd be looking at. I don't think you're going to get a sustained move out of gold miners, but in terms of AVX, yeah, I think it's going to go. I don't know. I'd be surprised if it even gets much over 18, over 19, let's say. I would not. I don't think it's going to break the high from earlier this month. I think this is pretty much, right around that 19 level. But I think that's still a decent. I think it can squeeze its way back up. So yeah, I think this company's got great options liquidity. I think near term weekly calls. I think this stock could easily run its way up over 16. So in terms of options, this is a great name, and I think that this has the potential for a short-term move higher. And you probably have some calls with this that could work extremely well. This is when gamma is with your friend. I think something like these 15.5, 16 calls in December, I think that's the way to play it. So yeah, I think Barrick goes up, let's say to 17. Probably a little higher. United Healthcare has a dividend on November 30th. How does that affect the December option? It's essentially priced in. So, I mean, the stock will move. You'll see the price of the stock change, but the actual quote on the stock loan and the option is essentially pricing that in. So the option won't move based on that. So you're talking this Cuba fund. There is this actual Cuba fund. This is, I think if you drill into it, this is just one of those things that is just, this is nutty stuff. And this is not the way I like to look at things. I think this is the things where you get people hyping stuff, they talk about it on television for a few weeks, and then you get stuck out in the cold and you realize, wow, it's like a bunch of random stocks that some guy cobbled together so he could, make something with the word Cuba in it. All right. Bank of America, I do not think it will climb higher. I'm just looking at some questions. The housing market, BZH or NVR? Well, I'll tell you, I don't really like either of them. I would rather look for companies that have got more options liquidity. Both of these are like kind of graveyard companies. I'm not really sure. I think if you look at the big names, names like Lennar, look on Research Lab, you can see that you're getting to, much better options volume in some of these bigger ones like Pulte and stuff. I think that one might have more. So I would look for the ones that have more options liquidity because, you look at a name like Beazer, 1,000 a day is not bad. NVR, I don't think trades very much at all. So if you look on the page, Research Lab, look over here. This thing doesn't even have any real options volume historically. So I would say Beazer is the better of the two because, but overall, I think you should look for more liquid names. What about GoDaddy? We had a bullish trade in GoDaddy recently. I think this one's probably going to break out. This is a relatively new name. It's had some good earnings. It's not like your typical kind of NASDAQ stock that everyone knows. It's still a relatively new name. So I think this one is one that can move higher. FITV, like all the other banks, I think, time to sell calls in it. Do I think Grubhub will continue to go higher? I'm not sure about this one. It's not really, in my opinion, in the best sector. No, I don't. I think this one can still go to 32. I would avoid this. The reason I say that is this is a pretty ugly, this drop here. That's a pretty sharp drop. It has stayed since then below this level. So, the see how much it came right back up, the low in October, then the high. I think you got to see it break back over that low in early October, the high earlier this month. I think this stock has a bearish engulfing candle if you look a few weeks ago on this one. Very often stocks will retrace most of a bearish engulfing candle and then just get slammed. So I don't think this one. I think this is looking kind of risky still. I think you could see this stock go under 32. I think Netflix is still in good shape. I mean, this was one that no, I think this one is going to – I still like this stock. I mean, to me, this is one that there's a good chance of this name rallying into year-end. This company is turning, and I think you're going to see it move back up to 130. So I'm still bullish on this one. Not a fan of Alphabet. I just think that this is just not the best sector. It'll probably muscle up here a little bit, but I'm not really bearish on it. I just think this is going to just languish around. It's in the middle of its range here, so I'm not sure you're going to get. I think it's going to push up a little bit higher, but I'd be surprised if it goes much over 820. What levels would I look to get long Nike? I think you got to see it rally over 52.5. Let's take a look here at this level. There's a high from October, 52.5, 53. I think you want to see it clearly get over that level and hold. I'll be honest, it doesn't look good to me. I mean, this stock, I think this company's at risk. I think this one, to be honest, might break down. I would not just look into this as a buy. I think this one is looking pretty risky to me. I feel that Disney as well. There's another one here that came off the lows. See how Disney turned to that 50-day moving average? And this one has not yet done that. I'm wary of Nike here. I've been looking for a bounce in it, but I don't think this is the right one to be in right now. not an expert in these businesses, but I think at the end of the day, it's like a lot of these, you got to realize that Nike, Lululemon, Starbucks, they all get to a point when you get saturation. And I'm not an expert like in the shoe market, but I think when you look at what the numbers have been in this name, when you look at their earnings, I think you just have to realize companies get to this point when they are brand companies, orders weak, inventory glut, orders weak, guidance disappoints. That's what we've seen in this stock really all year. And I don't know. I just wouldn't bet on this being a particularly I'd be wary of Nike. I think it can break lower. In terms of those Brazilian companies, I'm not sure of the options on them. Most of those guys are not really as much great on options. Do I think NVIDIA has run out of steam? Well, I think, again, there's another stock that will probably be higher in a year, but could be lower before that. I think you want to sell calls in it if you're long shares. And I think if you're not long anything, I think this is one that we've been looking for a pullback on this one. Let's see here if we actually have this. I think we're looking for 80 on this. No, this is wow. We haven't done this one in a while. So I would think in this name, I think it's definitely going to go under 90. I would say from here. So I think near term, yes, I would be not short, but I think the risk reward is not very positive on it. I would tend to think that it's going to go under 90, and depending on the circumstances, I'm going to set a longer term price alert at 80, although that could take months and months to happen. I mean, it could bounce at 90, go to 100, then stall, and then in the second half of or sometime in the spring, have a sell-off down to 80. So for me right now, I think the high on that gap up day, 88, I'm going to say 89 is the level of NVIDIA where we want to be active. Is AMD going to 10? Now, someone's asking about my criteria for window dressing. What I often believe is that the window dressing companies are often going to be the turnaround companies that at the beginning of the year, people would have, insulted you for liking. So at the beginning of the year, Advanced Micro Devices was going out of business. It was never going to, exist. And now it's like a major turnaround story. Those are the companies that are, I believe, often going to be your window dressing names. So I think AMD, that's the reason. That's one of the main things I look for, because it's one of those things when, and the companies that are strong at the beginning of the year very often are the ones that don't do as well. But AMD could have a lousy next year. That would be my point. I would tend to think that AMD come January, that could be the time to ring the register on it. And NVIDIA might have that same sort of thing, although it's run so much that, we were saying this was going to be a window dressing name when it was like 6 or 7. I think right now this is something where it's hard to really guess much beyond it. This will probably take a stab up to 10. Yeah, I think so. Look at the high back in 2010. It had a high right around 10 and a quarter. I think that's going to be your target on this name in Advanced Micro. So RRC. The natural gas names have shown, this one, I think this was going to continue higher. Yeah, I think, I look at a name like this, the real thing in this is the rally between March and June. Then it retraced that, and now it's continuing higher. I like this. I think Range Resources will probably just go back well up into the mid-40s. So yeah, I like RRC. Let's say I think it can go back to the around 46. What is that, Devon Energy, DVN? Don't forget the OPEC meeting is coming up. Now, this is more of a natural gas name. I think this is one we've said is in range bound, and we need to see a clear breakout from this channel. I didn't record anything on this one, but I'm pretty sure this is one that's in a channel. I think you got to see it at this point. I think you might see it go back down to like, 38 and then 45. I think, when you see a range or a channel, I mean, they sometimes they break out, but my honest opinion is that most of the time the range wins, and I think that when a company is at the top of a range, usually it's gonna go back down to the range. I don't know. You're asking what's my outlook on energy. I really don't know. I mean, I've been pretty befuddled by the whole OPEC thing, and then one of the interesting points people made with the election of Trump, in many ways, potentially being bad for Iran is good for oil because sanctions could be reimposed against Iran or whatever. This is something where I'm really an equity person 80% of the time, 90% of the time. We have had some ideas of oil overall. We've managed to catch the broad strokes correctly. We did, expect both this rally here in September and the drop. Our timing was not very good on it. So I think right now oil, there's too much weird stuff coming out of the OPEC thing this week. I think this is range bound here. Just looking at the technicals, I would tend to think that oil is going to work its way back up over 50 and just basically remain 44 to 52 for the foreseeable future. Maybe 42 to 54 if you want to look at the wider swath. Not 54, but this high from October, late June. I think that's what we got in oil. This range right here, 43 to 53, in the crude futures, and it's coming off the bottom of the range now. So in my, one of the things I have tended to notice is when you come off the bottom of the range, you go back up to the top of the range. When you come off the top, you go down to the bottom. And so right now, I tend to think oil is going to keep grinding up to the low 50s. All right, there's also some put buying. Let's take a look at some more of today's unusual option activity, which, if you're not aware, is on a view to our subscription services. We do have our activity log. All these things are mentioned on today's activity log. You can go back and find all kinds of interesting stuff. You can sort for bullish and bearish by clicking on the boxes, hitting search, things like that. Let's take a look at some of the other activity. There was some put buying in Huntsman, the chemical company. This one has December $19 put spot. Western Digital. This has been the kind of name that we like. And by the way, I mentioned this earlier about Adobe, and I just want to point out, if you go here to like the XLK on Research Lab, you can see what I'm talking about. It's been so Western Digital. I'll go back to XLK, but first, Western Digital, they're rolling a $59.50 call, so it's 62.5. These are the calls that expire this Friday. This is a shorter-term chart. It's not a huge trade, but this has been a name that we've really liked. We've been very bullish on these on STX and WDC, and I believe this is what I'm talking about. In the cyclical part of the economy where we are now, so they were buying these 62.5, and they sold the lower ones. But in this cyclical phase of the economy, you want to be long the names like, the hardware. Those are the area where you want to be, and you don't want to be in the names like Adobe or like Facebook or like Amazon, because those are secular growth stocks. You want the cyclical growth stocks. Devices, these things, they make real stuff. This is where the strength has been. And Western Digital. But take a look here at XLK. Look at the member performance in the last 2 weeks. It's like chips, chip. It's just semiconductors almost entirely. So this is something I wanted to mention. We have seen recent strength, for example, in the telecom names. By the way, I did want to mention we had identified upside in these telecom stocks on Market Action Pro. We did basically, suggest that people look for short-term rebounds in these names. And now if you look at Verizon, it's getting up to the range that we had essentially targeted. And, a name like Verizon is going to probably have a little bit more strength. But if you look here in the QA bank, we identified here, we said it's going to 49.75. Here it is, wow, over 50. So I think at this point, these are going to start getting near the top. They have a little bit more strength, but I also think right now these guys are going to hit some resistance. And I think that I don't think you want to. I'm not bearish on them by any stretch of the imagination, but I do think that these are going to give some opportunity to chop around. These are somewhat overbought, and I think if you want to buy them, I think now is not the time. Now is the time to wait. They're probably going to go a little higher, chop around. But when these guys have something of a pullback, and look at all the moving averages on this, the 20-day, the 30-day, or under the 50-day, this is not, in my opinion, set up for a sustained rally. This is going to hit a wall, chop around, and I do want to point out that if some of you guys have those positions, they're up a lot, and it probably makes sense just to ring the register for now and look to come back in a few weeks in the pullback. Some other names that have pulled back and have just gotten demolished. Let's look at Anheuser-Busch or whatever it's called these days. Okay. This company is trying to buy South African SAB Miller, which is the South African company that bought Miller a long time ago. But anyway, so this has been just beaten down. This is a 10-year chart on the Options House platform with monthly candles, and we can see that there is some good support across here, right around 100. I think that this is going to be an area where it's going to get defended. I think you're going to see some chopping higher from here. It's probably not going to be straight up, but this is kind of like, we had identified Verizon and AT&T when they were down at the bottom of these ranges. We had identified Verizon at 46, and now's the time, I think, for Anheuser-Busch. Another one in the consumer staples space has been Hershey. This company, had gotten beaten down because they were supposed to get bought, but the deal got blown up. But now that was way back in August. A lot of that pain and suffering has, I think, worked its way through the stock. Now you're looking at a stock that's holding the 50-day, holding the 200-day. This is, I think, one that also could work higher from here. So Hershey and Bud, I think, are consumer staples stocks that have really gotten slammed. And are probably going to hold their ground. Another one that's interesting that has rallied, and now I think we want to look for it to get something of a pullback. Let's look for CME Group to pull back between 110 and 105. That's the level we want to see on this one. This is a nice breakout, and I think that we're going to see more, opportunity in this. But, I think the stock, it probably will go to like 108 and then rally. But, when this thing gets between 105 and 110, I think that's where we want to look for it. Two other names that I think are interesting is Garmin, which I continue to love. I think this is another name that I think could have window dressing. I mean, who would have guessed how strong this stock would be? Look at the XLY on Research Lab. And we're also going to see this stock is stunningly outperforming, leading the sector on a year-to-date basis. And this is another one that I think everyone keeps saying Garmin's going to go out of business, and they don't. Look at this stock on a year-to-date basis. Here they are, one of the best in the consumer discretionary space. And so I think Garmin here is another one that can really just rally in the year-end. So this is one I think we want to look at. And another name that we cited a long, long time ago, it's a real estate investment trust, but it's an interesting stock. All the way back, we cited this name back last spring at 24, and it pulled back to the 50-day, and it rallied from that level. Store Capital, real estate investment trust. I think these REITs here, I got to say, look at the XLRE, the REIT fund. I think these guys are going to have some upside. I think the utilities. These stocks, I think, have the potential to rebound in the next 2 to 3 weeks. And it's the flip side of what I was saying about the banks. All right, here's another one that Mikey is looking into. Heron, he spotted this bullish call spread, the 17.5, 22 vertical in Heron. Now, look, biotech's been a mess, but this company has news coming out early in the year. They've got some kind of, I think it's a phase 2 drug, but they have something coming out in the year. Now, remember, whenever you see this unusual activity on the activity log, you can always jump over here and you can see here, if you look on the activity log, you can see that we actually did, this was in January expiration in HRTX. Well, it's interesting when you see that January paper and then you look on the Options House platform and you look at the implied volatility constellation, and wow, big spike in volatility, and you can see by looking on the quote page on the Options House platform right here, no earnings. This is all about they're going to be doing an update on one of their drugs. People are looking for that to be in January. So I think this one is interesting. The binary trade is an example of the spread being used to manage risk. There's some put buying today in Neighbors, NBR. It's a drilling company that's run pretty well. The December 13 puts were bought in NBR. And then MMP, there's a pipeline. The $72.50 calls in April were sold. All right, let's take a look and see if there's any more questions. Should we close the April 21 calls at Bank of America? I think that's not a bad idea at all. That would make sense to me. Because at this point in time, I think so. You've probably done really well in them. And I think that's probably wise. Because the other thing is, say it pulls back and it pauses for a month or two, you're going to start to hit some time decay. And then you're at a point when, say it drops to like 19 and it sits there for like a month. Well, you're going to start hitting the time decay, not right away, but, say it drops down there by February and you're going to be regretting not unloading it. So I think Bank of America here, if you're in those April 21 calls, those calls right now are going to be, I think, maximum value because they're right at the money. And that's going to have, the most juice. Wait, you're in the April 21s, yeah. Yeah, I think sell them. My opinion. Just ring the register. Do I see upside in Coca-Cola? I've said that I thought Coca-Cola was going to rally off this 41 level. I think it's just taking a little more time than I expected. Yeah, I think so. I think Coca-Cola is going to rally back to like 43, 44. So, yeah, this is another company with great options liquidity. I think this one will work its way higher. Don't forget, these consumer staples have gotten hammered with the dollar. And if we see dollar weakness, I think that we are going to see, probably more strength in the dollar over time. But for the next 2 to 3 weeks, stock like Coca-Cola can do very well. And you can probably have, let's look at the Coca-Cola's options chain here. This probably be one where something like the December, look how inexpensive these December 42 calls are. 20 cents? Those are only 35 cents out of the money. I think that would make sense. December 42 calls in Coca-Cola for like 20 cents. All right. Well, I'm running out of time. I did want to mention a few other things I thought were interesting. Geopolitics, one of these things everyone likes to talk about them, except I really don't like to, but right now we have to at least pay attention to things. And I do think it's interesting. First of all, we have the Italian thing on this coming Sunday. First thing on my list, the Organization of Economic Cooperation and Development actually raised their economic forecast for next year, saying that Trump's stimulus is good for the economy. So that's interesting. They're kind of following what we saw in the cyclical stocks and what, a lot of what the Treasury yields have told us. Mario Draghi basically said today that on December 8th, he's going to tell the world about the future of QE. That's going to be a big event that's going to get a lot of attention. So we have December 4th. Take a look over at Research Lab, your calendar. Actually, we started screening out a way you can see only the important events on Research Lab. I've started coding things as important only. We're probably going to put a little star or something by them in the future. But the really important events, we can actually see right here. We have the basically payrolls on Friday, the Italian constitutional referendum, and then this ECB meeting on the 8th. So that's going to be something that looms large, and I think it's important. And obviously this week we have event after event after event. If you look this week, we have GDP revised tomorrow, consumer confidence. We have ADP payrolls on Wednesday. We have ISM manufacturing on Thursday, non-farm payrolls on Friday. All big events. The other thing that was interesting was there was also some reports saying that the early holiday sales were kind of weak. I wouldn't put too much stock in that. I think that it really, people are looking for a stronger economy. I think that in many ways, the holiday season, the shift to online, the main people who lose are the economists because it's really hard now to really, I think, do your estimates. And I think that it's a lot harder to really track things. So I would tend to think that just the numbers are going to just be all over the map, but you're going to see strength will spread out over time. Another thing I thought was kind of interesting was, don't want to talk too much about this whole political thing, but it is interesting. This guy Francois Fillon, I mean, this guy could be the best thing that ever happened to the European Union. Because here's a guy who's actually a French guy who has more of an American sort of outlook on, economic growth, deregulation, tax cuts, capitalism, all that sort of stuff that France hasn't really embraced aggressively. But he could also save the EU and basically, prevent Le Pen from getting too strong. So I think with this Italian thing coming up, I think that over the weekend when Fillon really cemented himself as the heir apparent to the French presidency, I think it actually reduces now the risk of what's going to happen on December 4th. So I think right now it's just kind of interesting. So anyway, those are the main things I wanted to mention. I'm sorry if there are any questions I was not able to address. But there's also some call buying in Xilinx, like he's telling me about now. So I did see that one just now on the log. Can't remember if this company has some news. I almost feel like they were getting bought or something. So I'm not sure. This is interesting, but I'm not sure overall about Xilinx. I think that it might be tied to something else. So I hope everyone has a great and profitable end of the trading day. We will be back tomorrow. And remember, if you want to get my morning strategy note, you can email me at david.russell@optionmonster.com. One last look at the S&P before we go back. It has basically flatlined since the webinar began. We're still staying below that bearish engulfing candle. So, I'm not bearish, but like I said, I think that if we get a drop down to these highs from like the 17th, that's when you want to be buying SPY calls. Otherwise, just wait. That's what I think. Hope everyone has a great profitable end of the trading day. We'll be back tomorrow. Take care, folks.